but there's something on the earnings calendar that I think could be a massive banger. Let's have a week. There's not too much on the economic calendar other than Jerome Powell speaking on Tuesday on the health of the economy, so that could move markets pretty drastically. There's also the consumer sentiment data on Friday, but other than that, just a bunch of Fed speakers speaking on what they're going to do with the interest rates and the overall economic health. But there's something on the earnings calendar that I think could be a massive banger. So let's get right into it. This is the SPY chart. We've already been over this a million times. This is the weekly chart, and this is the breakdown. We already broke, clearly we've already broke this downtrend, and now we're trending upwards. We're at this top of this Bollinger Band. Still some strength. I see some strength here, still even after the interest rate hike. But if we zoom in on the daily chart, let's talk about the room here. So this is a nice little rejection candle. If we start to gap up, there could be potentially that 420 level that we could test. So I'm looking at this 420 level, rejected way back here in August, bunch of consolidation over here way back in June. You know, there's been a lot of bounce levels right at that 420 level. So we rejected last Friday, so not a significant level yet. There's a support line around this 410, but I also drew this. Let me get rid of both of these lines. There's a nice little uptrend right here starting from January 19th. We ran from 386 all the way up to 417, 418. That's actually crazy, but there's a nice little uptrend right here. So we could retest this week. This one will probably bounce down to around this level. Could see that 408, 409. If we break that, then we're going to see some nice blood, probably back down to 400 test, but not so sure that that's going to happen this week. You can see some volume start to come in here, and we're not really moving so much over here. So could be the beginning of the pullback, maybe just a retest of this 408 level. So that's a support level I'm looking at below this 410, 410.50, then 408. But on the bullish side, I'm looking at that 420 level. There's two things I really want to see happen. If the market is bullish, I'm going to look at Tesla $200 calls because, well, Tesla's a beast, and it rejected 200 here, but it's been kind of consolidating at this level around this 165 to 183. Could be a really great opportunity to take it around this 185-ish area, 190. If I start to see momentum, we already tested 200 and rejected. We got to 199-ish, but then above 200 is all gas, no brakes. So I'm looking at that $200 level on Tesla this week. I also am looking at Meta 200. Not as confident. Two nice little levels here that I have. One is that 180 support level. That 200 got rejection around that 197, 198 level. So nice little two tweezer tops here with a massive gap down. So I think that this is going to fill at some point here. But like I said, if the market is bullish, wouldn't be surprised to see this touch 200. But if it's bearish, this will be one of the first stocks I take on the put side because, damn, that's a lot of room down. And their earnings report was not that good. Just a share buyback that caused it to be bullish. So I'm looking at this level right now. Nothing too much on the stock side. So I got Meta, I got the SPY levels, I got Tesla. And we could just take a peek at the QQQ, just slightly, just a little bit. Same situation over here. Down to 300 is a really great support line, I would assume. I don't think that we're going to break out too much. Technology sector should take a hit here pretty soon. So, yeah, I'm going to look at this $300 level as a support line. So if we start to see some weakness, may not pay out too much, but I would look for those $300 puts on the weak side. And one thing that I am paying attention to on the earnings calendar, there's a bunch out there that has some pretty nice premiums, but this could be a banger. So I'm looking at, lo and behold, CHGG. CHGG. If you cheated in high school, if you cheated in college, you know all about this website. I used it a ton. Not saying I cheated, but I cheated. So I'm looking at the daily chart right now, and I'm looking at the weekly chart. So we've seen a nice little pop. It doesn't move too much, right? There's not a lot of opportunity right here on the day trading side, options trading side. It's just a shit stock, shit company, right? ChatGPT is blowing up. That's a great point. Someone made a great point to me that ChatGPT is really blowing up and everybody is using their information there. So ChatGPT might be taking over. On top of college enrollments slowing down because of hustle culture, right? And their web traffic views are down 36% in a month from October to November. diving down during during finals week. So they're not gearing up for it. Maybe December was a little bit better right before break, but it doesn't look too good to me. It does not look good to me whatsoever. So earnings traffic's down. They're dropping in website rank as well. So I looked at the option premiums, right? So the options chain is everything during earnings, and there is a fat IV percentage. So they are expecting, I did the calculation, they're expecting, so you can see they're 108%, which is a ton. So these could end up getting shredded even if the contracts, if the stock falls 10%, which is only $2, they're implying 14% move. But I think with that weekly chart at 15 below, 21 to 15, well over 14% drop. So that could go outside of the implied move, especially if it's a really bad report and they have a bad forecast. So this is all speculative. This is just my opinion, but I really do like this analysis because even at that $15 level, let's say it breaks that weekly low and we see a massive gap down, they're $5 a contract. You could probably buy these for $5, $6, $7 a contract if it doesn't gap down. Or even these $35 ones, 5 to 35, in the monies are $225. Imagine if these $5 contracts ran to $225. You put $500 into these, you could buy 100 contracts. 100 contracts at 200 is $20,000 from 500. That risk-reward ratio to me seems insane. I'm going to dabble into it. My goal tomorrow is to make about $1,000 to $2,000 day trading. Throw it all in a CHGG. Fuck it. Why not? Make some money, let it work for you. And it's a gamble. It's an earnings play. It's high risk. But with these option premium prices, the way that they are, I know that these are going to shred down a little bit and the decay is going to be pretty insane. But at $5 a contract, $5 to go in the money, could be a banger. Think if I make $2,000 tomorrow, throw it all in the CHGG, $2K, say it goes to $225. I have 200 contracts. It could be 40 grand off a $2,000 investment. Could be one of my biggest trades ever. Might not. Probably won't. These option calculations, these guys are really smart. But for some reason, this one seems a little bit mispriced to me. So there might be something I'm missing, but a really good opportunity. So Tesla, 200. Facebook, 200 on the bullish side. SPY to that 420 on the bullish side. Maybe SPY 408 on the downside. And then CHGG, earnings tomorrow after the bell. I could be all in. So hope that helps out. Let me know if you take it. If you take it and it works out, we're going to have a really, really nice group hug one day. But if it doesn't work out, you didn't hear the idea from me. So do your due diligence, risk what you're only willing to risk, and what you're willing to lose. And happy hunting. Have a great week, everybody.